What's going on YouTube? Eric here from MajorLeagueTrading.com coming at you with a new video for today. We're taking a look at what happens and what you should or shouldn't do when you miss a trade or you just don't take the trade that you either had planned out or that you were thinking of taking, had a signal for a trade, but for some reason you just didn't take the trade. So what we've got up right now is a chart of the S&Ps here. You can see we're currently printing 33.90s, and we made new all-time highs today, 33.9375. So markets gapped up here to 33.81 quarters and just rallied to new all-time highs today. We rallied about 12 points from the open there and got a little bit of a pullback now. You can see we're rallying that back some here. And the big thing here is, I had a game plan for today, which we'll pull that up in a second, and none of those trades actually took place. What I planned out in the morning, none of those really ended up taking place. We didn't trade back to the support level here of 71.75, which is what it was that I was looking for. I wanted to see a nice pullback in the morning, and then we could rally through the rest of the day up towards the $3,400 number. So let's take a look at what I wrote this morning on the morning write-up here. So we're looking at this as something I send out each and every morning, and basically what I was looking at is, okay, news announcements on the day, fairly light. We've got FOMC meeting minutes at 2 o'clock. Shouldn't be that big of a deal, but if something does come out, then, it could start shaking us up here. And then come on down here. These are the important levels, 81 quarters, 71.75s, and 57.50s. And then a couple scenarios that I was looking for here. Looking for a range-bound day with highs and lows potentially already set in the overnight session. The overnight highs here were 33.82s. Overnight lows were 33.7075s. You can see that's really, really close to these two levels here, 81 quarter and 71.75s. That obviously was not the case today. That was scenario number one. Scenario number two here, a pullback from the open into 71.75s that we can get long from and hold for a move up to the $3,400 test there. We didn't get the pullback to 71.75s, so scenario two is out. Then we take a look at scenario number three here. FOMC completely shakes the market somehow, and we trade under 33.5750s and can start looking for shorts down into 33.36 quarters. Scenario three did not happen. I also wrote in here, overall in the day, I think the S&Ps may be a little bit hard to trade if we don't catch the first pullback. If there is one, individual stocks that are moving look to be the way to go. So that kind of fourth scenario in there, if there is a pullback and we can capture that pullback, then I think we have a tradable opportunity on the day. But again, here's the charts, all that fun stuff there. And what we ended up getting here, again, was no pullback in the S&Ps. No pullback in the NASDAQ. The first 5-minute low in both the S&Ps and the NASDAQ set the low of the day. This is the four grid here. S&Ps in top left, NASDAQ in top right here, Russell in bottom left here, and then the Dow here in the bottom right. So what I ended up missing, the trade that I talked about in the trade room, that I said out loud, that I punched in the chat, all of that was right here into the Dow. So the Dow, you can see, if we zoom back just a little bit there, that should take us to the open of the day. You can see Dow opens here 9:30 with the rest of the markets. We're stuck right in between this 29.306 to 29.267 zone. This was a support zone for us. If we could break above that, then we were good for long opportunities. This was all levels that were shared in the morning right up there. I shared the S&Ps, NASDAQ, Russell, and Dow levels for the day. And I'm permitted to take a divergence trade if it sets up. And it actually did here at 10 o'clock. It triggered on the very next bar. So your entry here on the Dow is up over 288s with stops down under 260s. So about a 30-point stop there in the Dow. And the Dow rallies, 120, 130 points from there, from top to bottom. So overall, I missed this trade. I didn't take it. I saw it. I talked about it. I called it. And then we ended up having another divergence here at 10:10. Where the Russell actually made new lows on the day. Nothing else did. So we had a divergence. 10 minutes later, we had another divergence here. This also did have a signal in place in the Dow, and we rallied it from there. So what ends up happening, right, is you end up taking these trades, or you end up missing these trades, I should say. You have these trades planned out, or you have these criteria that you want, like the divergence trade. I'm permitted to take that trade. I saw the trade. I called the trade. I didn't take the trade. And what you'll typically end up doing is you end up chasing that, right? When you miss a trade that you've got planned out, or a trade, you overslept or something happened, someone got a phone call, distracted you, whatever the case is, and you missed that trade that you were looking for or that you're permitted to take, or you just saw the trade happen and for some reason didn't follow your rules, you broke a rule by not taking that trade, then what you'll find is you start chasing that trade and revenge trading and trying to make that back. And the thing that you don't want to do is that you already broke one rule by either not taking the trade when you were supposed to, or by not being disciplined at your desk, or a number of factors, right? You don't want to compound that and then start trying to chase this thing, and then before you know it, it's 50, 60 points away from you, and then now you're trying to buy in, and then you're getting stopped out here, you're trying to buy back in again, you're getting stopped out, and then you just turn a no trade day, which is what it was for me here in the futures at least. You turn a no trade day in the futures into a losing day, and then now you're even more mad at yourself, and that starts to perpetuate, and it's just this kind of endless cycle there. So you want to try and avoid those. So if you do miss your trade, it's completely fine. The markets are open tomorrow. There's going to be more opportunities. So just keep that in mind in the future. Thank you guys for watching. Be sure to click that thumbs up button down there and subscribe to the YouTube channel and hit the little bell notification so you know when we go live and when we post new content here on the channel. Thank you guys so much for watching, and I'll catch you in the next video.